All right, let's have a look at our weekly review for the equities market. So let's start with the usual. Let's start with the Dixie first. Dixie, as it is the market mover. Okay, so I'm going to start from the monthly chart because the month is ended on these charts. So it's good to start from there. We've just broken this consolidation base by this candle, and we've just gone lower one and had a kind of pullback. So on the monthly chart, I would expect one more leg to the downside first. And if we get another divergence like this, that will probably be the end of the fall on the Dixie. And then we'll do some consolidation and then continue its journey to the upside. I expect more downside in the Dixie from a monthly perspective, but with all these monthly close candles, when you close the month like this, what you should expect is a bounce back on it. If we go to a lower time frame to go and see where the bounce might go up to. So similar to how you had this big selling candle and you had a bounce back on it, and you see we didn't actually go, like a double top on it, and then you go down. We could do the same. We could come all the way up to here. We could even go and do a double top. Maximum will be here for me. I think it probably comes into here. So we can put our interest box for the bounce back to this zone as the zone for bounce back. And in terms of a weekly, we would expect that it will come into our interest box. I think Dixie will continue its journey to the downside and come down to this box here. I think between here, 94, and where the box ends, which is 88, somewhere there, price will fall into and we'll get some bullish consolidation. I'd expect the MACD to come down and rise up before we start seeing Dixie going up again. So that's Dixie. In summary, small rise to the upside next week into back into the wick of this weekly candle. So we've drawn our box there. Maybe I'll make it bigger here. So somewhere there, would expect price to play around in before coming down. Let's make it slightly bigger. So we'd expect that to happen and then continue its journey to the downside. So that's Dixie. And then let's move on to Nasdaq. So the Nasdaq is it's not going to look a good look on the weekly chart. Now let's start from the monthly chart as well. So we're closing green on the monthly chart, but it's like an indecision candle. Bulls are still in control on the monthly chart, and we closed above the close of the previous month. So we are still in a strong uptrend. However, on the weekly chart, we do have some candles that are not great. You have this kind of hanging man type of candle, and then also we've closed below the low. That is a sign that actually there's going to be a bit of a retrace first before you continue the journey to the upside. I mean, I think the retrace comes to these tops here, which is sitting around 22139. So I'll put my line there. And so between here and here, between this top here and this top somewhere here and here, I think price will, and then we continue our journey to the upside. If you do a percentage move from the top to here, that's about 6%. Six, if it comes to my line, it's about 7%. Now I'm going to show you an example. Okay, so here, okay, so when we started the move from the base, you can see we did a move. We did a quite a big move, right? We did about, I think it was 30 something percent. This was a 52% move, right? Okay. And when we started having these sort of stopping candle, guess what happened? We did a drop of, this one was a drop of 11% back to the 50 EMA. So, if we have something similar, 11%, if we fall back to the EMA, then, you're talking about 10%. So I won't rule that out, I won't rule that out that we'll do a 11 to 10% drop on the Nasdaq before we continue going up. But I think initially it will come here and then, come here, do some maybe some consolidation if there is support. It could be very quick, and it could also be something like this where it just happens, boom, 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 and it just basically. But from history, this one did not act that way. We had 1 week down, 2 weeks, 3 weeks down to the middle of the band, KC band, and then we went up slightly and then continued the journey again, then up slightly. That is the sort of pattern that you would be expecting. So I definitely would be expecting that we would do I think we'll do the 11% drop. So which will take us down to 11% will take us down to here. So that is where I would ultimately expect us to land. I'd expect us to land there. Move my. I expect us to land here before we continue the journey. But we'll come in here, do a bit of a bounce, then come down here, do a bit of a bounce, and maybe we might do a small swipe to the downside first before we continue the journey to the upside. So, but for next week, the target is to the middle of the band here, which is sitting around 22971 or 72. Will be our target for the Nasdaq next week. We expect downside on this. So let's move on to the SPX. The XPX is similar, and actually the SPX gives us actually a more conclusive, you know, pattern to trade because you have your stopping candle right there, right? So if I just get rid of that, we have our stopping candle right there, and we've closed below the close of this candle here. So I will expect us to also do the same. And I think if you again go and have a look at your previous beginning of the move, okay, so the base was here. Yeah, so from the 200, you can see here we went all the way up, up and up and up and up and up and up all the way here. Okay. And then because that was a percentage move of from here to there. It was 32% move, okay? And we've done the same 32% move, I think, from here to there. It's a 34% move, right? So it's comparable. And then you had a retrace of, again, 11%. Okay, so if you put 11% on there and you say, okay, look, 11%, 10%, 11%, that brings you somewhere here, okay? Somewhere to where my line is. Okay, so I might move my line slightly to the middle of the band. So, that's what you'll be expecting, but I think for next week, I don't think we're gonna do all that. It's possible we do all that next week, but I won't bank on it. I think it'll be a gentle move like it was here. As it was here was gentle to the KC band, bounce up, again down, bounce up, and then have your final. So I'd expect something very similar. So I'd expect this to come all the way down to the KC band here next week. So next week I would expect this to fall here and then bounce up and then come back again here, bounce up, and then come back and do the last one. Will be what I expect on the XPS, similar to the Nasdaq as well. Let's move on to gold. So gold, okay, so gold, this is the monthly chart on gold, okay? So this right here, it's, I don't think I have volume. I want to get the volume on the gold chart, the actual gold, the other one. Yeah, okay. So we've done quite a move, right? On this move up on the monthly chart, but you can see volume. So this volume is not even comparable to the sell volume here. Okay. And so until I see strong volume which increases past this, I think this is just the last opportunity for people to take their money off the table. Before the collapse, is what I'm seeing. I mean, you could potentially go into this box that I've drawn up here slightly into this box to knock off some stop losses, which are sitting at the top here, before you continue the journey to the downside. So I'm not going to rule that out that it pokes above and knocks the stop losses sitting above here before we then start pulling back. So if you step into the weekly chart and have a look at the weekly chart, so weekly chart, we closed above these peaks here and above that. That's a good close. This candle is still is a controlling candle, right? So until you close above this candle, it's still a bearish look for me, because this whole box here has been a kind of a chop sideways box. And for me, with all these divergences from here to there, it tells me that, we haven't reset properly yet. So, I want us to reset properly, and I think gold will come into this box which you've drawn here. So I will be laying some shorts as we go into next week. I'll be, if it bounces up higher into this box, I will be laying some shorts there. I already have a position already, a small position, so I've started kind of collecting it, and it's a very small position. I'll add to it if it pops up. If you bring it to the 4 hour chart, you can see that we had kind of like the euphoria candle again. Whenever you see these candles, and it's not followed by another one, and also we've gone outside my KC band. So clearly, this is the end of the move, especially when you've got this sort of candle at the end of it. So if you look at this one here, clear as daylight. That's a very similar pattern here. And guess what happened after that? It's you come down. So I would expect we'll come down because market makers don't like this candle sitting without any proper retrace to it anyway. So if you look at this one here, they retraced and took all the liquidity on the candle. If we look at even this one, they took a large proportion of it. This one, they took a huge proportion of it back. So I don't see as if we should have been going up, then this candle, the next candle would have been green for me, and it's not. So I think, I've taken an initial position somewhere here, at 350, 3500, somewhere around there. And I'll add to it if it pops up again, as I've explained. So gold is a short for me. Short-term move, maybe slightly move into this box. Probability is a 50-50. I think probably maybe I'll put it as a 40% chance it goes into here, versus 60% of it going down, would be what I would say. Because we've also, another reason why, we've also just had a golden cross. And with golden crosses, especially, after you do the move, you do a quite a good retrace. And I think it's on the, if you go to, is it 12 hours or is it 8 hours? No, okay, it's on the 4 hour chart. So on the 4 hour chart, yeah, we have a golden cross. So, with golden crosses tend to mark, tells you that the end of the move is coming. So prepare yourself. And that's exactly what's happened here. So it's a short for me on gold. Let's see what we've got. So we've got the next one would be GBP USD. We like to review that as well. So let's look at GBP USD. So take it on the monthly chart. Right, okay. So we have a divergence on this monthly chart. So you can expect it to continue going up. I think, it goes up whilst Dixie also goes down. So you can expect it to go up one more time. And I think, that that move to that 140, I put my short entry there. It's waiting. Probably will get picked up on that. So that's GBP USD. You get a long trade. I think it's a long trade to 142, and then it's a short trade from there for me. For next week, I expect it to continue going up. You will get small retrace. So if you even bring it to the 4 hour chart, you'll get a small retrace. You get a retrace, and the retrace might come all the way back down to here. So we can put our stop loss somewhere there. Take the long trade, put a stop loss. I don't think this is working. Anyway, just leave it. We can put another alert in, and we'll put it here, and we'll label it stop loss for the long trade. Stop loss. So, and so I wouldn't buy now. I'd wait for it to come into this zone here and then take the trade. Or I mean, if it comes down, I think even here you can take the trade. Even here you can take the trade from here. And then it continues journey to the upside. The daily looks very, very strong. Strong rejection of lower prices. Maybe you come back and test exactly where the stop loss is. So if you're going to trade it, don't put your stop loss there. Put your stop loss below. Slightly below here will be where I'll put my stop loss. And I'll buy somewhere here. My entry will be somewhere here. So let's put entry long. Yeah, I'll put my entries. I'll put my entry somewhere here. Yeah. So I mean, you can buy a little bit now here if you want to, and then when it gets down here, you buy some more, and then it goes up. Okay, so let's move on to the next thing, the next pair that we need to cover. I think we've covered all the equity stuff. We've covered Nasdaq, gold, SPX, Dixie, GBP, USD, oil. Let's cover it as we are here. Let's have a look at oil. So oil is done a let's move on the monthly. So monthly we've had a pullback, and so oil is move. Let me just see here. So that's one leg to the downside, another leg there, another leg here. We've come back into it. There's a potential for oil to go up a little bit. Yeah, there's a potential for oil to go up. I think, yeah, oil goes up. There's too much liquidity sitting on this candle, which is not being taken. So I won't be surprised if oil goes to retest, $83. I think for next week, unlikely to get to 83, but I think for next week you can expect oil to be somewhere around here, somewhere around the 72 mark, I think. Yeah, so that's oil. That's oil, and that's the end of the review, guys. This is obviously just ideas from my ideas, and I'm sharing it. So do your own research. Be accountable for your own trades, and take what I say with a pinch of salt. I'm not a financial advisor, for you, and I don't know what your situation is. I don't know how much money you've got. So please take it with a pinch of salt and do your own research. But if you like the content, then obviously click the like button. And if you've not subscribed, then subscribe. Have a great week.